Once you see it, you can't unsee it. Short video today, traders on the $4 signs of trading. In the last few days, we talked a bit about the matrix and my approach, Peter Brandt, classical charting patterns, being on the outside, looking for opportunities, high month, low month, high week, low week, high day, low day, then understanding the consolidations. So if you're new or you haven't been following the channel, go back and watch the previous few videos. There's lots of videos summarizing the strategy, my basic approach. And again, I mentioned that perhaps I leapfrog some basic concepts, so I'm just going back and revisiting the most important approach is an understanding and a mindset. And the first thing I talked about was setups. The majority of retail traders, and I'm going to keep using that term and focusing on mentioning that 90% of retail day traders and retail traders in general lose money. And I was part of that group for a long time, 15 years. And even with all the education, the learning, I had a great education. The more learning I did, the more frustrating it became, the stupider my mistakes became, the larger my losses became, the larger my wins became. But that repeating cycle, no consistency, no long-term consistent growth. And the emphasis of the majority of my education or my sharing my experience with other traders is, number one, for hopefully the ones that get that to leapfrog a lot of the financial and losses and mental frustration that I went through. But I emphasize setups, because setups are what skilled traders who are pulling large amounts of money out of the market consistently, small amounts, large amounts, consistently over time, have setups. They have an approach that they go and trade at the market each day when those setups present. They have a routine, they have a schedule, they have a model to identify trade setups. Trading setups are not trying to catch moves. And again, one of the things that retail traders fail to conceptualize, I talked about being in the matrix. The majority of education, courses, training, information out there in the trading world is recycled retail hogwash. And it works some of the time. But retail traders try to trade it all the time, or they try to trade all of the different approaches on every move in the market. And I talked about you're either inside or outside. So again, if you missed last day's video, go back and watch the previous video. So when you build your playbook, and you don't have to trade like me, you don't have to do anything like me. You can, as I've said right from day one, if what you're doing is working for you and you're making money from it, then keep doing it. But I'm talking to the traders who probably have an extensive education in trading, a lot of them, but they've been failed to be consistent over time, get to the size that they need to be or want to be at, or they repeat certain behaviors and cycles and blow out their account and start again, even with all their knowledge of the markets. So I talk about building your playbook. You might be trading trend. We talked about three things that markets do. They trend, they reverse, and they trade sideways in a trading range. So those are the only things that markets do. That is the only things that markets do. So I have a playbook of different setups that I look for. So the first component is having setups that actually have edge. So we'll talk about this in a second, but you just trading retail information, so moving average, crossover, stochastics, market maker strategies, smart money concepts, all that's great. But if it's not simple and duplicatable and scalable, at some point you'll end up repeating the same cycle, either taking a large loss, blowing out your account, or engaging in impulsive, erratic, and emotional behavior. So build your playbook. Understand that there are different setups. There are day one setups, day two setups, day three setups. So which days are those? Well, I talk about my day starts on Monday. You have to build your playbook. Now, scalping versus size. There are session scalps. There are high of day and low of day scalps. There are trades at the high and low of the month that are scalps. But there are also trades at the high of day and low of day that are sizable and scalable. What determines that? The timing, the template, which session that they appear in, and the buildup into that trade itself determines at which point they are sizable or just scalpable. Not all trades are the same, even when they present the same. Understanding that, going to the market with that confidence and unconscious competence to know when to size and when to scalp. Again, retail traders will blow their accounts out usually on poor piker trades with too much size, and then they'll go make a 150 pip trade on a sizable trade with 0.01 lots and say they got 150 pips. So again, size, understanding which trades are scalable in size and which trades are scalpable. We talked about that in one of the most recent previous short videos. The second component of the $4 signs is money management. Understanding what your max loss is on specific setups. So on one of the previous videos, again, go Google it, on risk management, I talked about 5-star, 3-star, 1-star. Not all 40 pip trades are 5-star 40 pip trades. What that means is that, for example, there's a 40 pip, 50 pip, 100 pip move off the low on Friday night on gold after CPI that went vertical, which is a stop hunt. But there was also a 400 pip move that came at the New York Open 1 hour later that was sizable. And then knowing how you will size in or scale into that trade, how you will still manage your initial risk on that trade. So you could have a 50 pip trade in the London session, which is scalpable based on the setup, the timing, the nature of that setup in terms of the high and low, versus a 50 pip scalable trade setup after 3 sessions, maybe US, Asia, London, or Asia, London, New York, high of day, low of day trade setup that is sizable because of how it has developed over a 3-day setup, first red day. Those types of understandings about your specific trade setup. So what I'm trying to emphasize in this is that going to the screen and treating every trade the same prevents you from growing on the right trades, but it also gets you thinking that every single trade has the same potential effect, meaning that, oh, I took a 50 pip trade in London versus 25 maybe that's going to capitulate in the US that was sizable. So a 25 pip trade could be sizable based on how it presents in that template for the day or for the week. They all tie in together. So we have session, day, week, and month. And if you go back again to the last video, you'll understand the high and the low, consolidations, all of that can play into determining which trades are scalable. So first and foremost, what's your max stop loss, not only on the setup, but on a day? And I talk about, I look for 1 or 2 trades per day, occasionally 3, may have 3, 2 in one session, whatever that is. But I'm letting the market set up over the course of a day or over 2 or 3 sessions. I know that if I get a couple of trades wrong, then I'm completely out of touch with my day, the market, and I should probably stop trading. So a max stop loss on the day itself. So going back to the first part, you need to know that you have edge, not just catching moves. I caught 40 pips on Friday. That's not going to the screen saying that I executed a reversal trade setup after a 45-minute stop hunt on level 3. That's my ABC trade setup. I had an ABC trade setup versus I caught a move. So that might work in the short term, but over time, if you're treating your trading like a business, you have a trading business template that you're going to use each week and reproduce and duplicate over and over again. So again, knowing which trade setups to size into, because not all trades are equal. And what determines that again? The timing, the setup, the template, high month, low month, the session, the week, all of that ties in together. Then the third component is self-management. So you and your headspace have a lot to do with whether or not you're going to be consistent. And in the 90% of the 10%, so I use that analogy on the screen thumbnail, the red pill and blue pill. So the blue pill is people who are still in the matrix, and they will fight tooth and nail with a lot of concepts that I present. They will disagree. And as I said right at the beginning, if you're making money and you're making money consistently, it doesn't matter. I can guarantee you, and somebody said to me a few weeks ago, but Al Brooks does this and so does that. It's not my technique, my approach. I've never said that my way is the only way. It doesn't matter how you trade. Al Brooks has setups. Understand that. He has a certain window of time that he trades. He doesn't just go to the screen and hope he catch moves. He has setups that he trades in his session. He knows when he can size in, which setups he can size into, and which days are just for scalps, which setups are just for scalps. He knows what his max loss is on a day. He knows what trade setups determine what loss he's going to take on that trade setup, because it's a scalper, it's a sizable trade. Peter Brandt, same thing. So don't think that I'm saying my way is the only way. What I'm trying to do is give you a reproducible template. But if you don't have edge, it doesn't matter what you do, because the rest of it will only, you could risk 1% on every trade, but if you lose 100 trades in a row, you're still going to blow your account out. Simplicity and duplication. So one of the things that I talk about in previous videos is people want to see, what are your backtesting results? What's your P&L? How big are you trading? All those sort of things, which are completely innocuous and irrelevant, because what I do is irrelevant. It's what you can do. And I know when traders ask me those questions and I tell them that, they don't like it. But the reality of it is when you go to the screen, as I've talked about, I have no idea that on a Friday night, as one trader told me in Adelaide, he might have a few glasses of wine, take a few trades just randomly before, outside of his actual approach to the market, some piker trades. Next thing you know, he's down 80 grand. So what you do and what your backtesting results show in the quiet time of your weekend are two different things. What needs to be understood is, what type of preparation do you do each and every day before you trade? Do you have levels? Do you have setups that you can identify, or are you stalking a couple of setups over the course of 2 or 3 days or 2 or 3 sessions? Do you actually have setups? Are you coming to the screen going, okay, I think this is a sell today, I'm going to sell it? That might work. And for the people who are highly skilled, that does work. But that's an unconscious competence that's been developed and hardwired over time. The second component is whether or not you can flawlessly execute those setups in live time, in the heat of the moment, not only with small lots, but scaling that up to where it actually has relevant meaning in terms of its dollar value. So I hear, I've talked about mindset in the past. Somebody said, is $250 a day doable? Well, I know a trader who, as I mentioned before, he's on track for $3 million this year. So he has the same trades that we have, the same markets to trade. So what's your belief about your own limitations? What are your limiting beliefs? What are your self-sabotaging behaviors? Because a lot of factors will play into that. How you grew up, what was programmed into your brain in the first 8 years of your life. Who do you hang around? Like I talked about last day, somebody said to me, I've never met a reversal trader who's made any money consistently over time. And I said, well, who cares who you know? I don't even know you. You don't know anything about me. You don't know how I grew up, what my abilities are, what I've done to develop my skill set, my own beliefs in myself, previous levels of success and achievement or unachievement, limiting beliefs or self-limiting beliefs, limiting. So when somebody makes a comment like that, as I mentioned, I see somebody who's frustrated, who doesn't have real understanding of the market or an approach or a rinse and repeat method that actually has edge. So when I said that out of sarcasm, and I know, again, some traders won't like that, but I'm saying it because I know who I am. I know what I can do. That's not overconfidence. That's confidence that's been hardwired through repetitious learning over and over and over again and forcing the boundaries 1% better every single day. P&L, backtesting, and stats are not an indication of edge in live performance, except over time, which means that the trader is developing the unconscious competence skill. So understand that backtesting results are irrelevant if you can't reproduce them consistently in live time. You yourself, the trader, you, the blue pill. The red pill trader knows because they have setups. Their stats indicate their performance on certain setups. So I talked about dropping out certain setups that I thought had edge, which they did, but then I thought I had to try and trade all the time, which is why, again, I talk about narrowing the window down to specific times. There's a reason for that. There's behaviors in the market based on the time of day. Algorithms, HFTs, institutions, central banks, smart money, whoever, who cares? It doesn't matter. Who cares? Who cares what somebody told you? Who cares what somebody thinks? Who cares what you read? What matters is whether or not the approach and the setup has edge. So you could make $100. I made $100 today, but did you really execute a trade that had edge, or did you just get lucky? So over time, again, understanding, was that edge or was that luck? And if your edge has luck, fantastic. But again, over time, as Peter Brandt says, one trade doesn't indicate anything, but trades over a sample size can give you feedback about edge, about your live performance, and your skill. So self-management involves not doing any STBs, which brings us to our fourth $, which is stupid trading behaviors. Stupid in red because it costs you money. The other ones are green because they make you money. And all of these four, unless you have all of these four, over time won't be green because eventually you'll do something stupid. So stupid trading behaviors can involve lots of screen time, going into tilt, which if you're not sure what tilt is, go back and watch my video on tilt. Taking random trades, again, trades that not necessarily have edge. You might get lucky, you might blow your account out. Over trading, over leveraging, emotional, impulsive, erratic behavior, anger trading, hope, fear, and greed. I've back-tested. I want to see your back-testing results, Stacey. Okay, you take 3 losses, you get into a massive winner, but you get out with 20 pips. Why? Because you got your ass kicked on the last few trades and you don't understand actually what you're trading. And so you got out of a winning trade because of fear. And then on the winning trade, you actually traded smaller with size, small size, but you over-traded size on the piker losers that you took. So even though you had a 20-pip winner and you might have only lost 40 pips on the other 3 losers, you traded twice as big on the losers and you lost money because you got angry, you got frustrated, you were impatient. Stacey said it worked. It didn't work, so you wanted to get even with the market. So you took a get-even trade. These are all the things that people fail to recognize will happen in live time, and that comes back to having setups, a set routine, preparing, identifying, and knowing what you are looking for. Not being proper funded, not having a daily routine that helps prepare you. And again, we talked about accelerated 7-step daily routine for high performance traders. Accelerated learning is part of that curve. Your belief, your mindset training. Every single day you need to bulletproof your mindset. If you don't bulletproof your mindset, we have over 4,000 negative thoughts a day. The negatives will start to grind you down and bring you back down into the level that you're trying to get out of. 1% better every day keeps you focused and moving forward. Kaizen, constant progress. If you're green, you're growing. If you're ripe, you're rot. So again, headspace is massive because as I know, I've talked to many traders. They've blown their accounts out. I myself have been through some dark patches. And the only thing that got me through, 2 things: being stupid and resilient. And that resiliency has come from years of athletic training, ice hockey, Ironman triathlon, just being hardwired through accomplishment, knowing that I could achieve things, seeing small successes, building on them, being around the right people, constantly learning, trial and error. Dorian Yates, journaling, talks about he would take one thing from somebody, take something from Arnold and try it. But if it didn't work for him, he'd push it aside. He would focus on the things that worked. And that comes back to what I said about simplicity and duplication. You can have all this expert knowledge about the market, but if you can't keep it simple so that you can duplicate it day in and day out, week in and week out, you will end up going off the rails again at some point. Simplicity, duplication, simplicity, duplication, simplicity, duplication. If you're not properly funded, you will start to trade out of desperation and emotion. That is the bottom line. And I think everybody knows that. Thinking that working harder and longer will make them better doesn't. Not in trading. It is the one thing, and this is why a lot of very successful people from professional backgrounds struggle and fail at trading and then walk away bitter and angry and say it can't be done. And if anybody else is doing it, they're lying. But the problem is that they're smart and they think that being smart determines whether or not they will succeed. And they're hard workers. They'll work harder and longer and they'll do the same things thinking that doing the same thing harder and longer will make them better over time. It doesn't work that way in trading. You need to have edge. Go back to the first part, setups. I don't care what they are. You need to know when to trade them, when not to trade them. You could be using, I talked about using a moving average crossover. You could use a moving average crossover. And it works at specific times. Maybe when you're not at the screen, though. So if you can only trade the U.S. session, and it happens in London, and that was the one perfect trade, and you're only trading one instrument, and you come to the screen in the U.S., and you're going to try to trade and make pips or make money when you're in the U.S. session, because that's when you're available. So you're going to try and trade that, because you're only trading 1 or 2 things, or you're trading 15 things, and because you're trying to trade too many things, you can't actually identify the one that's a good setup. So simplicity and duplication. Trading harder and longer doesn't mean your edge will get you different results. So hopefully that makes sense, traders. Mindset reset, tying it all together, going back and putting all these pieces together, knowing which instruments you need to trade, knowing what your setups are, how often are you getting your trade setups, knowing what timings you're looking for your best setups on those instruments, knowing which trades are scalable, which trades are scalpable. Knowing also, once you've taken your trade and the money off the table, do you keep trading or do you stop trading and walk away and come back the next day and do the process again? So I talk about when I take my trades, I'm done. Because in the past, I've blown up accounts after having huge winning days just by going back and trading more. I'm running a business. My objective is to make money. Part of making money is to not engage in stupid trading behaviors. Over trading is the number one reason most traders will end up blowing out. Obviously over leveraging and all that stuff, but over trading. So hopefully this video adds value to your day. It doesn't matter how you trade. You have to have edge. You need to know how to manage your risk when to size into your best trade setups, when to scalp. Know how to manage yourself, your emotions, your daily routine, your preparation, your ability to execute in live time. So again, back testing. All that means nothing if you can't execute. If you want a system that is going to execute 100% perfect every single time, develop an algorithm, and develop an algorithm for different types of markets, trends, reversals, trading ranges. Simple as that. Then know that you're not going to do anything to go into tilt and blow out your account after all the hard work you do to get results that you're after. Keep it simple. Enjoy your Sunday. Get ready for the week. We're going to get some more perfect trade setups this week. When and how and where and which instruments, I have no idea, but I know we're going to get them because the markets are going to be moving. Have a great weekend, and may the markets go with you.